YouTube, what's going on? This is TerrenceRe, and I got a video today of something I was getting ready to do on my actual chart myself. And so I said, why not do a video live and show myself doing it? So this video is going to be how I use expected move to make trades, right? And we're going to get right to it right after the buffer. All right, what you're looking at right now is the option chain for the SPX. And so what I'm getting ready to do is I do this, I generally will do it at the end of the market on Friday or like on a Saturday, maybe even a Sunday. But I make sure I have this set up when the market starts Monday morning, right? And I do this for, stocks that I'm looking at trading too. So I look at the option chain. And looking at the option chain, what I want to do is find the weekly expiration, the one that expires on Friday. And that's going to be this one right here where it says 6 days, right? So let me see. I'm gonna use my little epi pen and let's see if I can the one right here. So I'm gonna draw a little square around it. Right there, it says 6 days. Now, if you look over here, you got a plus or minus 95. Right, 95.75. So they're saying that the option chain has priced in a move for the week of plus or minus $95.75 for the SPX, which is the option market for the S&P 500. So what I'll do is, now that I have that there, now that we know it's 95 75, so I'll get a calculator, right? Let's put a calculator up. So what the price is right now when the market closed, 39.11.74. So I'll take 39.11.74, subtract 95.75, and now we got 38.15.99, right? So what I'll do, I'm gonna move this off the screen, leave it over there, and then I'll come to, or I just write it down. So we don't have to keep moving around. So you write that number down, or if you can remember it, that's great too. Now that's gonna be to the downside, right? So now we're gonna add. So let's bring our calculator back. Now let's add. So now let's take 39.11.75. Oh, excuse me, 74. I messed that up. 39.11.74. And then we're gonna add 95.75, right? Now that's going to give us a target to the upside. Now this is not going to tell us what direction it's going to go, but it is going to tell us what the option market has priced in for a move of next week, according to TastyWorks expected move. So um, this particular platform, now you can do this with other platforms that have expected move. I don't think all of them do. I know TastyWorks does, and there are others that do, but this one I think is a little bit more accurate in my opinion, from me with my experience. So I'm gonna click on the option chain and open it up, and if you look right here in the center, this little ruler, this is that. This is I'm gonna go to the option chain right here. This is where the market closed. So not down 95.75 is gonna be right in this range. You can look at it here. All right. And then to the upside will be right in here. Right. So what we'll do is we're going to come and plot this on the chart so we can see it visually. We'll come right here. We're going to click on chart. And I'm going to come, you see, I got it right here for I may have already done it for this week. No, this was for last week. So what I'm gonna do, and I update it every week. So you can see that the market on Friday got right here and then kind of went through it, right? So we'll come here and then we'll click on it. So all I did was because I already have it here. So I'm gonna click it. Let's see. It came up before. No, that's my Fibonacci stuff. Let's see. Click it. That's if you don't have it already on there. If you already have it, if you don't have it on here already, you will come up here where it says tool, and then you will come down to horizontal ray, and then you will click that on there. So what I'll do is I'll do it from scratch. Um, I'm gonna right click, I'm gonna remove this. Yes. Right click. It did not remove it. There you go. I highlight it. Remove. Yes. Click on it. Highlight. Remove. Yes. Now I'm gonna do it from scratch just so you guys can see. Excuse me. Now let's come to tool. We're gonna come to horizontal ray right there. Click that. Now I'm gonna come somewhere right into this range and I'm gonna click. We're gonna do the upside first. So it'll be 4,000, somewhere right around 4,007. I'm just gonna click it. And you see it put the little line there. Now I'm gonna double click it. So now I can come in here and put the coordinates on there. So I come to price. I'm gonna put four. That's to the upside what we had, and then I'm gonna put the date. So Monday is, let's see, the day is the 25th. Tomorrow's the 26th. So Monday is gonna be the 27th. So I'm gonna put the date in. So I got the 27th, and the market opens. The stock market opens at what, 9:30. So I'm gonna put 9:30, and then we'll put AM. So there you go. So here we go. And what I'll do is style. I like to make it green just because that's the to the upside. So we'll put it green, bright green. Then I'll make it like two as far as thickness, and tab over, and then boom, there it is. So that's to the top side. Now we're gonna do the same thing. Now once I already have this on the screen, I do this for the SPX every week. Now once I already have this on the screen, you don't have to put it on it. You can just click on it and then just edit it, for the next week. So we're gonna come up here. We're gonna do the same thing, horizontal array. Come down here. The bottom side was 38.15. So we can put and you'll see why I'm using this. Right there, double click on it, come to coordinates. Bottom side was what? 3815.99. Is that what it is? Read my own chicken scratch. Um I would say Monday is 27th. That, and then we're gonna come over here. Then we're gonna put market opens at 9:30 on Monday. We'll put that. And I always use, so if let's say that the Monday is a holiday and when the market's not gonna open, so I use Tuesday. I'm gonna use the opening, whatever that date is for the opening day of the next week. Come to style. You can do whatever color you want. I just like red for the bottom, for to the downside. And there we go. And I make it two so I can see it. And then there we go. And so you can see this is where the SPX closed on Friday. And we got, this is where we got it projected going. So this is the range. That's about, a 95, $95.75 range. Now you may say, well, how does that help you trade? You can do this for a monthly exploration. I like to do it for the weekly. So then I can kind of gauge, do we have a large move set for this week or a small move? Do I think vol is going to contract? So if the market opens, let's say the market opens, that the futures open on Sunday evening. Let's say the futures market opens Sunday and then we get an up move. And so when Monday the market opens up, the SPX gaps up and we're up into here. At that point, I may be expecting the rest of that day on Monday to be down just because we're at the expected move. There are going to be option. So what generally happens is you're gonna have sellers right there. Other people do this, or I would say, I learned this from an experienced trader. Like I paid to take some classes and I learned that. And and so learning that, and he came from he actually the trader I learned from actually used to work for um a big what you call it, a big firm that we all use. We have money in. So he was in the risk department. So and he also was in charge of the education there. So traders use these expected move. Option traders do, and so the market can open. And also, look where this line is. It just so happens to coincide with this gap right here. So that's going to be support. So if the market was to open up here already, you might be able to, if you're day trading, you might be able to start looking for a reversal in that area. Start looking for a double top, or maybe on the 1 minute or the 5 minute. You can maybe buy put options on that day and maybe scalp. You could be doing a weekly option. You can do this for monthly expirations. You can do this for whatever expiration you're looking to trade in. This just gives me a gauge of what will happen for the week or what I think is going to happen. Now, it can go outside of that. But for the majority, even if it ends up going outside of this for the week, I would still think that if it hit it early in the week, you could still get a little bit of a pullback, right? Same thing to the downside. So this is one of the ways, and you can do this with any. Now I'm gonna save this just so I don't have to do it again. I click up here, come click on this trade setup, which I call the active trader, and click yes. And so now it's saved on this platform. It's saved now. I don't have to do it again. And so this is a way for you to kind of like map out your week, and you can do this the same way. Let's say you trade Tesla, right? So like a lot of times people be like, well, it's going to the moon and this, that, and the third. It could go to the moon next week. Anything can happen, right? It can go all the way to zero. Something could happen. But let's look at what the option market is telling us for Tesla next week. Tesla for the next week, Tesla has a $46.71 move that the option market is pricing in as being within a normal range. So it's normal for Tesla to move plus or minus $46.71. This is why I like the TastyWorks platform. They have some little tools and stuff, if used properly, things that you can do to help your trading. Even if you're not an option trader, just looking a price target for the week. So if you want to buy Tesla, let's say you bought it on Monday, and on Monday it's up $46, right? So now you got a price target. Or you can sell out. They was like, well, you don't know when to sell, you don't know when to buy. Yes, I do. I know when I'm outside of a normal range. And if I'm outside of that normal range, then I could take a bet that we're gonna come back into that normal range. So if I was to buy, and speaking of Tesla, I see a little bull flag right here, right? So we got a up, got a pull back, and we look like we're gonna take out this high. So $46 and what I say, 71 cents, somewhere around there. Let's just call it $47. We'll put you where 784, and that'll put you where right up into this area where this high is. So it will put you right up into there, and then to the downside, because remember, it will put you maybe right here where this low is, right? So it's a lot of different ways you could do this. You could you could do it maybe iron condor for the week, a weekly iron condor. Sell it up here, sell it down here, and say tell the market come beat me. There so these are some of the things that you can do, like weekly trades and stuff. But as far as it's just day trading, you got a target. You know, if you got a monthly range, let's say you're looking at buying Tesla for the month, right? Let's go look around. I wouldn't now you got earnings on July 25th. So I would if I was gonna do this for I would stay within that earnings before it. So 27 days, look. And I would say that the monthlies would be more accurate. So I would do like 20 days. You got a $89. So let's say I'd be looking to make 80 bucks if I was buying this stock within the next 20 days. That would be my target. Meaning I would if I bought it and it went up 80 bucks, I'd be looking, I wouldn't hold it 89, right around 80, 75-ish. Pull your money out. You can just you don't even need to you don't even need a chart. You can just come in here and just say, if you like the stock, well, I'm gonna buy it, and when it go up 80 bucks, I'm out. You don't care what the chart look like. There are a lot of, and so this is one of the ways you can use expected move to quantify what's going to happen in the market. You can let me show you guys a trick. And these people talking about with Bitcoin and Ethereum, you can do this with. Maybe not so much. Let's see, they don't have it on they got it on the micro Bitcoin futures. They got options. You got options, but they don't have. So they do have an expected move for 27 days. So let's say, and these are the micro Bitcoin futures. So you could come to the micro Bitcoin futures and you got a plus or minus 3,672. So you could come plot that out on the screen on the Bitcoin future screen. Let's just, what's that? 3672. So I would come over here and go 3672 up 36. So those what? Something 24 let's just call it 24.9 or somewhere right around in there. So you could put now look, that would be some type of resistance right there. So I would just call it to make it easier. I would say 26,000. So if I was buying Bitcoin and I just wanted to do a weekly trade, my target would be somewhere right up in here around 25.50. I wouldn't hold it to there, but there's where some resistance would be. And then if I was selling it, I would be somewhere down in here. You could do the same thing. You could do the same thing with the Bitcoin market. Yeah, and Ethereum too, because you have options on Ethereum. You would only be able to do this on underlines that have options because you're using the expected move for the option market to track these other markets. And that's and traders look at that. Seasoned traders look at the expected move to take targets. You can think it's going to the moon all you want, but the more liquid the options are, meaning the more traders you see wrapped around. Like let's look at Tesla. Let's go to the option market because I know Tesla is traded in the option market heavy. So for the next 20 days, let's move this. I want you guys to look at. So we're gonna look at the open interest and we're gonna look at volume. I'm gonna bring my pen out and show you guys how much Tesla is being traded. Come on now. All right. You see over here for the next 20 days, you got right here at the end of this ruler, that's 1,000 options right there, right? You got 1,000. If you come in, you got 9 right here, almost 10,000 options. Another 2,000 was traded on Friday. Now on Monday, this will become open interest. You got 4,000 right here. Another two, another two. Let's go over here. That's on the put side. On the call side, 10. So traders, look at right here at the end of the ruler. Look, 4,000. Right here at the end of the expected move. So traders are trading around that. It, a lot of times, people think that you can think what you want, but the market is going to do what the market does, and the market is just based on buyers and sellers, and people buy stock based upon like some of the things that's going on in the option market. And so you can look at, if we just looking at the SPX, it's gonna be crazy. You're gonna see when we come 19 days. Look at all these options. You got 47,000 contracts right here at this particular level. And it doesn't tell you you got 28,000 right here. What I'm showing you is the liquidity. When I say liquidity, you want to see thousands of options being traded on a particular underline. Look at Apple. I know Apple gonna be crazy. Look at this. Look at all these thousands. 41,000, 42,000 right here at 150. 61,000 at 135. Look at this, 50,000 at 140 on the put side. So when it's real liquid like that, then I like to use these expected moves in real liquid markets. Anything, if you look at my watch list, anything over here is liquid. And you can kind of like once again, like I said, SPX will help you be able to see the move. So next week, we're looking for a $95 move in the expected move. I mean, move in the stock market overall. So with that being said, you can kind of use that to gauge the rest of the stocks that you're looking at trading. Because once the SPX hits the top or the bottom of its expected move, you can look for maybe sometimes a little bounce around that area, and that could affect the whole market of buyers and sellers. There's no guarantee, but for the most part, it's pretty accurate. 67% of the time, within one standard deviation, it should be pretty accurate, that expected move. All right, guys, hit the like button, hit the subscribe button. If you got something out of this video, share it. Hopefully you did. Try to do content that's helpful, and support that just by hitting the like button. You helping me out just by doing that, subscribing and sharing it with other people. And with that, guys, I'm gonna be out of here. Peace.